Now, in our previous video, we got to learn what stocks are and what are the benefits you enjoy as a stock investor. Now, in this one, we'll talk about where all the stock market action happens. Now, before we begin, let's start with the concept of primary markets and secondary markets. Now, a primary market is generally where you buy something first-hand. Let's take an example when you buy a house directly from the developer. Now, this is an example of a primary market. Let's say you go to a showroom and buy a car. This is again an example of a primary market because you buy it directly from the source. But what if you buy a house from someone else instead of buying it from the developer directly? This is an example of the secondary market. Now let's talk about the primary and secondary markets from the point of view of the stock market. Now, founded in 2008 as a restaurant discoverability website, Zomato is now one of the largest food delivery companies, right? It was founded initially as Foodie Bay in response to the difficulties that they noticed their office mates were having in downloading menus for restaurants. Their initial response was simple, wherein they uploaded soft copies of menus of local restaurants on their website. Initially for people in their office and then eventually went on to do it for everyone in the city. Now, as their popularity grew, they expanded to other large Indian cities, and in 2010 they renamed the company to Zomato. In 2015, Zomato ventured into the food delivery business. Between 2011 and 2021, Zomato went through a series of funding rounds. It sold shares in the company to investors who in turn invested in Zomato because they felt that Zomato had the potential to grow. Now, Zomato used this capital to expand and grow its business. Between 2011 and 2021, Zomato raised approximately 14,374 crores through investments from investors like InfoEdge, Sequoia Capital, Tiger Global, Ant Financial, and a few others. Now, the number of investors before the company went for IPO were 74. Now, Zomato further raised around 9,000 crores through its IPO, where many investors invested in the company. All these transactions happened in the primary market. Here, the company issued new shares in exchange for capital, which was in turn used to fund various growth initiatives. The company got listed on the stock market on July 23, 2021. This is when the investors and traders started buying and selling shares of Zomato among each other on a daily basis. Now, all these transactions happened in the secondary market. Now, they help in price discovery and determine how much investors are willing to pay for these shares. Now, Zomato came out with an IPO price of 72 to 76 rupees per share. As soon as the shares got listed on the exchange, the share price went up to 116 rupees per share and further rose to 126 rupees per share. This means that the investors were confident about Zomato as a company and hence were willing to pay a premium for the stock in the secondary market. Now, what is the stock market? The name is quite self-explanatory. Like any other market, this is where buying and selling happens for stocks. Now, for stock market, it's clearly stocks, right? Now, there are two ways of buying stocks. One, you can buy directly from the company, which is in the primary market, or from the secondary market, which is you can buy it from other shareholders. Now, number one is the primary markets. Here, companies sell their stocks and we can buy them directly from the company itself. This allows companies to raise money to fund their business. Number two is the secondary market. In this market, all the buying and selling happens between investors like you and me. Now, the company doesn't play a part in any selling of new stocks in this market. Now, this gives investors the opportunity to benefit from the growth of these companies. Now, all transactions take place between investors and traders among each other. Right? The new stocks issued in the stock market are bought and sold in the secondary market over here. Now let's look at primary market in detail, right? Now remember, the company is the seller here and you are the buyer, right? So the transaction is actually a one-way transaction. Now you might be thinking that this sounds a lot like an IPO. Yes, you're right. This is almost like an IPO to an extent. Now IPO is one common example of a primary market. IPOs are basically initial public offerings by a company. Now, this is how a company issues equity stocks to the public and goes from being a private company to a publicly traded company, right? Now, there are many companies that keep coming out with their IPOs every year. And as mentioned earlier, primary markets help companies raise money to fund their business. Now, before the IPO happens, companies even declare what they plan to do with the raised money. For example, when we saw Barbecue Nation launching their IPO, they mentioned that they raised money, the money that they raised will be used to reduce the company's debt. However, an offer for sale is a part of most IPOs. Now, this means that the existing promoters of the company might be interested in selling some or all of their shares. Now, in an offer for sale, which is also known as OFS, no new shares are issued to raise capital, but existing investors sell their shares in the IPO. Now, if you revisit Barbecue Nation example, in this IPO, the total issue size was 452.87 crores, out of which fresh issue was only 180 crores. This means that the company is issuing new shares to raise 180 crores. The remaining 272.87 crores were existing investors selling their stake in the company. Now, how can you get this stock? Right? Well, you have to apply for the company's IPO, right? This means you have to first bid for these stocks based on a lucky draw system. Yes, a lucky draw. You will not be allotted stocks. That is, if you are only lucky, you will be allotted stocks, and we see that happening. Now, there's a lot more to cover regarding IPOs, which we will do in a later video within the Groww Academy. Now, there are other examples of private placements as well. Right? Now, there's private placement, which I will explain very shortly. Now, imagine there is an exclusive IPO, right? A company basically sells their stocks to pre-selected investors and institutions instead of going public, right? These may be wealthy individual investors, big banks, financial institutions, mutual funds, and insurance companies. For example, when you see PNB Housing Finance went for a private placement, they raised around 4,000 crores. 80% of which was funded by a US-based private equity firm called the Carlyle Group. But why do companies go for this instead of an IPO? Simply because there's lesser regulations and restriction requirements when it comes to private placements. Now, that was the primary market. Let's look at a little bit about the secondary market. Now, this is what we've always known, right? So let's say you bought stocks from a company in the primary market and now you want to sell these stocks. Where do you do this? This is where the secondary market comes into picture. This is where you sell. Now, after that, the investor who bought these stocks from you sells them to another investor, and so on the cycle keeps continuing. Now, secondary markets are important for price discovery. The price is determined by the demand and supply of a particular stock. The buying and selling is facilitated by the stock market exchange, which is something we will cover in detail again in another episode. For example, on 27th July 2021, approximately 26,43,000 shares of Reliance were bought and sold in the secondary market. The total value of these shares were approximately 545 crores. Hence, generally, secondary markets operate on a much larger scale than the primary markets. Now, let me show you a table for the differences between primary markets and secondary markets. Now, in the primary markets, you will see that the seller is a company, whereas in the secondary market, you will see that the seller is any investor or trader. Now, the buyers in the primary market are basically us, investors, traders, institutions, and the buyers in secondary markets are investors and traders, not institutions. Now, let's look at the purpose. Now, the purpose in the primary market is a way for companies to raise money to fund their expansion, to fund their business. Whereas the purpose in the secondary market is basically an opportunity for investors to benefit from the growth of these companies. Now, we'll see you soon in the next video.